Hello guys and welcome. This is the final edition of Technical Tuesdays and it is volume 17. Now it's been a while. I've decided to lay back on the videos. Been very busy also. But as I say, this is the last Technical Tuesdays in which we are recording. So I'm just going to go over the major pairs, some of the most recent analysis that we have posted on social media, for instance, and just to give a roundup of how some of those specific positions played out and so forth. So yeah, I'm going to start off with the Euro USD in a moment. I'll do five pairs. Do 5 pairs today. Okay, so yeah, I'm just gonna run through it now. Euro USD. We have been bearish on this pair for quite a while. As you can see, we are currently ranging on the 4-hour chart. Not much movement since the start of December. Even from really the 20th of November, we haven't seen too much volatility in the market. The liquidity is low, hence, some of the pairs we are getting some crazy spikes as huge orders are pushed through here and there. So yeah, as you can see, Euro USD, I'm going to start on the 4-hour time frames for these pairs, and then I'm going to go up to the daily, weekly, etc. to give the overall view. So as you can see, Euro USD, we have been consolidating. Let me just zoom out a little piece. Okay, so this is what we're looking like overall. As you can see, I've took these ranges I've had plotted on for quite a while on this specific template. Now, all of these ranges are in fact 300 pip ranges on the Euro USD, and it's basically mapped it out. I would say it's mapped it out for a considerable amount of time. As you can see now, this range here, 1.2520, we did in fact it hit that as strong support back in I think it was last month. I can't really tell by looking at this, but I think it was last month or the month before. Anyway, we bounced back off that level, so we've had a breakout, hit the 300 pip range base support zone. We've come back up a good 200, nearly 300 pips on this spike, and then we've rolled back over. I think that was in fact a Fibonacci move anyway, and I remember actually posting this. Okay, yeah, it was a Fibonacci move. As you can see, we spiked up all the way to the 78. Whip back down, had another attempt, whip back down, final attempt, whip back down, and did in fact get the MA crossover, broke a simple counter trend line, and then we headed lower, doing the swing, lower highs, etc. Then we came back down to this key level of support, 1.2520, and now we are in fact trading below that, and that's now our most immediate level of resistance. So with that being said, these ranges, the Euro USD is going to play out to these ranges for a considerable amount of time, as I just mentioned. So as you can see, I think it was today or last night, we did in fact spike above the 1.2520, 1.2550 region, and we were dragged all the way back down. As you can see, we do have this range here. It's not really, there's a wide, I wouldn't say wide, but I would say 20-30 pip range on that certain level of resistance there. Okay, but as you can see, if you wanted to call this, a lower high from this lower high over here, then in fact this level here, which we spiked on last night, as you can see visually, it is in fact a new lower high. So with that being said, as this was the last lower low, the market and price structure can be said to come down now and form a new lower low, which will probably take out 1.2220, which may lead us below this level of support here. Okay, so once we are in fact, this is easy setup on that breakout counter trend line. Hold on, let me just turn this phone off. Sorry about that. Alright, yeah, once we are trading below 1.2220, so to speak, we could see another retracement, maybe make a new lower high here, but overall target is 1.2040, because I'll go to the bigger picture in a moment. And yeah, we have the lower channel boundaries around here. So I do think Euro USD could be Time wise, it's probably going to be January now, to be honest. Probably January, we'll be hitting 1.2040 fresh lows. And then there's a couple of scenarios which could happen. If we do break, we would need quite a lot of volatility in the market to just break straight below this channel, and we would in fact be going a lot lower. If 1.2 is broken, and it sounds a bit crazy now, but I do think 1.15 could be achievable for other reasons beyond these technicals. So yeah, with that being said, as you can see, we're just following the structure out, and these levels will in fact will map out the key level of 300 pip range support and resistance for a very considerable amount of time to come. So if we do come down to the 1.2 handle, which I think is very, very it's not too much of a big deal for the euro to come to that level. If we could see some, mainly on the daily, reversal patterns, etc., to go back up to the upside, then we know, as the euro is playing out this range, a buy from here 1.2 would in fact lead to 1.22, 1.2250, and so on. And if it breaks that range, R1, 75% chance we're going to come up to R2, and so on, once we are trading below here. So let me shift over to the daily. As you can see how my support and resistance are very, very accurate in terms of historical price levels. And we also have this range here on the daily and weekly trendline break, which still needs to be fulfilled also. Okay, let's go to the weekly. And then this other point on the weekly, which I wanted to just highlight, was simply this here. This level is currently in at 1.1936, 1.1900. So yeah, euro looking very bearish at the moment, and the monthly is let me just remove this Fibonacci. Yeah, the monthly is looking kind of weak also. We had this spinning top last month. The month prior we had the shooting star formation, and we had 1, 2, 3 continuation pattern there with those 3 candles. So we're hitting 5. If we do 5, we're likely to do 8. Just because it's simple Fibonacci. So euro is still bearish. I won't be buying anything on euro until it gets to 1.2, and maybe then it may only be short-term buys. Okay, so with that being said, we should flick over to Swissy. This is my simple Swissy analysis. As you can see, we are consolidating, however, on high, high, low, high, high, low, high, high. Bottom of this, the base of this spike here is in fact a higher low. All we have to be all this pair has to really do is break above 0.97, and then we're looking at 1. So a good 300 pip stride here to where this resistance is, and it's weekly resistance and it's daily resistance. So with that correlation between EU and UC, we can simply just always trying to envision a future in this market. Once we're back above this handle just here, 0.9699, 0.97, a 300 pips upstride can easily be attainable, which will push the Euro USD down lower. Cool. Next, Aussie dollar. Aussie dollar, for everybody who knows, the last technical Tuesdays we were looking at the 0.8400 level, simply because we had Fibonacci extensions, we had ranges, smaller fib waves on smaller time frames that lined up with the overall fib wave. Yeah, let me just put up a folder actually. Some analysis here. I'm going to flick through all of this in a moment. This is the most recent analysis. Where's my Aussie analysis? Here's one of them. Now this was a setup. I'm sure some of the viewers are familiar with this setup. We had the running double top, took the range height of that, added it on, added a Fibonacci, and that range height here at 0.8400 obviously come into higher confluence with other technical tools. We had we had many things basically when we were trading. I was short from around here after we've seen this bearish engulfing around 0.8800, so I was in a significant amount of profit in terms of pips, and it came all the way back up to my entry. but then I've seen it, reject this Fibonacci retracement, bearish engulfing, mini flag as well. So we could have took the leg of the flag, added it on, another confluence. And so it was very, very simple trade, and on the higher time frames, it was still making the lower highs and the lower lows. So yeah, I just went with my bias, held it for about a month. Many questions. Are you still short Aussie? I'll just leave it and just let it run. I do other things with my day, so I don't always need to be sat at the computer watching these trades. So yeah, after this, we did in fact fall to 0.8400, which was a relief, but we actually broke through that level, and we're currently trading at 0.8182. Now overall, I'm just going to do a quick little piece of analysis here. It looks like it's falling off a cliff on the monthly. However, we are approaching some monthly support just here. It's more of a range. It's not really a specific price. It's more of a price range at 0.8, which is 182 pips away. So again, I am calling Aussie at 0.8. For everybody who's watching today. Again, I can probably put this Fibonacci back on. Here, see with Fibonacci people, a lot of people struggle from finding the first leg, which is A to B. All you have to do is just practice. I learned Fibonacci just by flinging it on and seeing what else it comes into alignment with. And even if you miss the C retracement and you've still got room down to the extensions, you can still trade in line with that trend if the risk reward is good. However, and all our students know about that. All of the information we do give away on these Technical Tuesday videos, just a fraction, of what we do on the course, and so on. So as you can see. Fib D2, we've bust through this one. Now we are still, we have the Maribozu here as well without the wick, indicating the pressure is on, the momentum's on. It's a continuation pattern. Yeah, we do have some. It's this whole range, 0.8 and 0.7, 800. So around here, guys, I would see the first stall at 0.8 because it's a very, very strong key psychological figure. So yeah, bearish Aussie to 0.8 all day long. To see it's falling off a cliff at the moment. Anyone trying to buy Aussie right now, there's no sign of reversal whatsoever. I can just tell by reading how these candles are forming and how they are spiking to the upside. Keeps getting rejected. Yeah, so Aussie been short from all the way up here now, and we're just sliding, and we did give everybody, all of our viewers, subscribers, a heads up on these trades. The pip count, if you actually took most of our trade recommendations, would actually be quite substantial over the past few months, and again, we do this for free. Sometimes get a lot of negative comments, and when the hate don't work, the lies come out, and so on, but we don't have to do this, and it does actually require quite a bit of effort to keep on top of all of these videos and analysis, along with a daily life and other commitments. So I do appreciate the kind words, comments and enthusiasm from the people who appreciate the work and have actually learnt and made money. Everybody else who hates without watching our work, I couldn't care less about you. Sorry. So let's flick over to the next one. GBP USD. GBP USD, again, we are bearish to this down here. 1.5300 is the next downside target for GBP USD. Now, again, similar thing. People are trying to buy GBP USD, and it's absolutely insane because it's the simple price structure. Once again, is showing downtrend, downtrend, downtrend. It pops up here and there. But just keeps getting slammed, and slammed. Now, because we've already broken below the first fib, the target is now the next fib. Again, it's all about how to draw these fibs, etc. But here, let me just pull this up. Actually, I've actually annotated some of this work. We did all of this work last week because we went to New York. We had a few meetings. We met 5 students out there from who took on non-UK, and we also did a bit of teaching out there as well for 2 fresh students. Very cool guys. We got a lot of work done. We also balanced that with a little bit of fun as well. Went to some bars, etc. New Jersey area, New York. Did a bit of sightseeing and so on. So it was actually great to get away for a bit. A good end of year treat. But yeah, oh no, that's not the one I want. 1 second. Yeah, okay, so here's the annotated work which the student actually performed. FibD, hit FibD2, blah blah blah. So 1.54 to 1.5300 next downside target S1, weekly S1 on GBP USD. A break of that is going to lead us down to 1.4900. A break of that, God knows, I must leave the country. So yeah. That's a simple analysis on GBP USD. Don't get me wrong, the way we trade, want to follow the trend. It's not to say, okay, you can't get 100 pip, 150, maybe even 200 pip uprise on a specific pair, going against the trend on smaller time frames. That's completely up to you. I just do this analysis so you can use the information and knowledge in combination with your trading initiative on the whole, you know, and just learn from it. That's all. So that's that. Okay, Euro Yen's quite an enthusiastic pair recently. Okay, let me just crack on to. Alright, I'm just going to pull up this analysis here. Let me find it. Euro Yen weekly fib. Okay, so Euro Yen weekly fib analysis. We took out the 145 yearly highs, and we're currently breakout retest on the 145.50s, and we are currently ready for a next leg up, I do think. Same thing again. When we had the I think it was the yen Bank of Japan came out with a lot of yen weakness in terms of going forth with quantitative views and etc. Now, a lot of people who are out here in the Forex market especially are getting wrapped up in a lot of fundamentals and so on. Don't get me wrong, some of it does work at times, but most of the times you can the charts, the candles, just the technicals in general, if applied correctly, do in fact paint the clearer picture overall, and it's a very, very vivid picture if, again, you do know how to do it properly. So yeah, around here we had a major hammer, a weekly major pin bar, and again another one, so twice the prices came down, hit this where I've highlighted here was a key weekly level of support. As you can see from this price here, high, low, blah blah blah, burst through, come back to retest it, pin once, pin twice, so that's 2 weeks in a row. 1 second. 2 weeks in a row it's been rejected from that 134, 135 level, and then 1-2 hit the Fibonacci as well. So the week after this huge up move, this 500 pip up move, I think it was 400 pips, that's when QE came out. And I remember on my last Technical Tuesday videos I said hammer, Fibonacci weekly support, and we're now looking for 145 again, because this is a reversal pattern and all we need is that kick. Now the fundamentals, even though the price told us first that this is going to happen, the fundamentals did in fact come out a few days later. I remember it was 2 days later after I did the video, and then give it that extra kick in line with the technicals and the price. So again, we don't really go into fundamentals in depth. We'll explain to the student how the market is basically a very, very manipulated market, because it is the biggest market in the world. There is a bit of a dark side to the market. However, we don't focus on fundamentals. We'll give you all of the tools and what to look out for and how to trade around it. However, we don't strictly trade our fundamentals. Now, a lot of people are trying to teach fundamentals out there, and then all the students start to rebel against them because these methods don't work. So, just a heads up, any fundamental analysis in this market has to be combined with decent, and I mean some decent technical analysis skills, or you're just going to fail miserably, and yeah, probably start crying. Okay, so Euro Yen overall, as you can see, we had the breakout, the retest, and what was that on there? This in 1 second. Okay, 153 is major level to the upside. However, when I say 153, it doesn't mean that you go to like a 30-minute time frame and just press buy and aim for 153. you've got to actually use your brain a little bit, because it can pull back a substantial amount, especially because I'm giving you weekly key levels, monthly key levels, and daily key levels. So yeah, I don't go into detail on any of these videos how we combine the higher data analysis, daily, weekly, monthly, to get the best risk reward factor by combining that information with the information from the 4 hour, 2 hour, 1 hour, because that's strictly for like the students, etc. And I do it in a very specific manner so we can get the best of the higher time frame targets, but zooming in to get a refined entry and using a smaller stop loss, so to speak, so we can in fact get the best risk reward profiles in the market, because that's what's going to give you longevity and a decent profitability factor overall. So yeah, Euro yen's bullish. I'm not even touching this market until probably around the 10th of January now. Okay, so GBP AUD, this is an interesting one, as I did have some great analysis on this pair. I can pull it up. I did put it on Instagram a good 2-3 weeks ago now. So this was it. It was a very, very hard market to break down. It took me about 4 minutes to do this. So this trend line here was from the weekly. We had this inner trend line, outer trend line. We had this key level across here, as you can see. It was quite a range of support, broken down, bounced back up. Yearly highs. And then where did I get this range from? I think I just took this range here because like a little mini head and shoulders pattern, and yeah, the confluence here and here. So I had to take the height of that, added it on the top, added it on the bottom. I found this triangle formation here, so I took the mouth of the triangle, added it onto the breakout, and that came into perfect confluence with 1.98, nearly 1.2. So yeah, we needed to break the yearly highs. Now this was very, very start of December, and we traded at 1.85. If you go back over, we're currently trading at yeah, a good 500-600 pip up move on this pair. And again, I had my little drawn on here to see, okay, what can potentially happen next. As you can see, this key level, this yearly high level, it's breached it and it's made a new higher high after making new higher lows. Higher lows, higher lows, higher highs. So it has completed the form, however it hasn't closed above that level yet. We would need a solid close. It could potentially pull back, okay, it could potentially pull back and maybe even retest the 1.88 level, sorry. We could even try fib on this. If you put a fib on that, as you can see, 38.2 and so on. So it could pull back before going long again, because it has had a substantial 1100 pip up move from this key level here, the last higher low. In terms of targets, we've got the 0.97. We also have, I would say 2 overall, 2.000, 2.0400 and 2, around that this level around here. But again, I would have to keep my eyes on top of this one. Yeah, I'll say 2.04 overall. I probably push the Australian dollar. Australian dollar would probably go lower also. But okay, so just to wrap things up, Euro USD 1.2, 1.2040. Been talking about this level since we broke all the way up here, and I see so many people talking about the same level after watching our videos, but that's cool. Euro yen 153s, Aussie dollar 0.8000, and then 0.7800. Sterling 1.5300. GBP AUD 2. Potential pullback first to 1.88, but overall long-term upside target is 2 and 2.04. Swissy upside to 1. Gold again, drop gold quickly. I was saying 1100 on gold and it came to 1130. What a shame. Did this crazy retracement, absolutely insane again, and we're putting in again. If this can sustain this lower high here, I would say probably in January once again we are going to see 1100. Then I will reanalyze and go from there. If it breaks 11, we could potentially come to 10. If it comes to 10, I'm going to be putting a little report together with the correlation on gold, and actually just buying physical gold for those people who want to invest in something for the year 2016 onward, when we might see a little bit of chaos. So there's that. Silver as well. I did say silver, and we'll see silver around 13s. I'm still sticking with that bias, just the market's been quiet. So again, people, thank you for tuning into these videos, sharing the videos, the positive feedback on the videos. Now, we don't just stop things, especially here. Actually, we don't just stop things and just at a halt. We have, in fact, got new things on the way, and everybody will be introduced into these. Going to be new videos and new aspects of analysis, which we are going to be offering with a few other high-level traders. So, with that being said, that's going to be introduced mid-January. So, I hope everyone has a great Christmas and whatnot. So, yeah. Any information on the course going forward for the new subscribers, viewers, followers, just shoot us an email at contact@astrofxc.com, and our website is astrofxc.com. So, it's been a great year. Hope everybody's learned something. I hope everybody achieves their goals, dreams, desires for 2015 ahead. And now I am out.